Academia Sinica lowered its forecast for growth in Taiwan this year to under 2% on Wednesday. Some economists thought the estimate went too low. But listening to TSMC Chairman Morris Chang at the company's investor conference, you would likely think that the forecast is not too far-fetched. Chang said an economic recovery still seems far away.
TSMC Chairman Morris Chang was full of smiles at the investor conference when talking about his company's strong second quarter. But when he turned to the domestic economy, he admitted there was a lot to worry about.
We
recently did some cost cutting. We have already done it twice. People expected the economy to strengthen last year, but it didn't. There was again hope at the beginning of the year that the recovery would come this year. But at this point, that doesn't look likely. It's a long-term illness.
Chang also predicted that the semiconductor industry would only grow by 1 to 2% this year, about the same as estimates of growth for Taiwan's economy as a whole. In January, Taiwan's Statistics Bureau predicted that GDP would grow by at least 3% and could reach 4%. But with the domestic economy stagnating, Academia Sinica forecast on Wednesday that Taiwan would only grow at a 1.94% clip. One of Chang's concerns about future prospects is that the government is still intent on imposing a capital gains tax on stock transactions. As part of the measure, it would adjust the minimum tax rate for corporations to 12% from 10%. Chang has opposed the clause, saying it would unfairly penalize companies that don't trade stocks for profit, like TSMC.
The tax would cost TSMC 3 billion Taiwan dollars in profit. And assuming a 15 price-earnings ratio, that means a loss of 45 billion in shareholder wealth. From what I remember, that's about the same as was spent on the consumer voucher program.
The legislature is expected to consider the capital gains tax legislation at a special session later this month. With Taiwan's economic prospects uncertain for the rest of the year, Chang and others are questioning whether now is the right time for any additional drag on the economy.